Today, Ether soars to $1,200. Turmoil in the UK government delays crypto regulation. And Morning Consult breaks down new data on crypto adoption. Welcome to CNBC's Crypto World. I'm Kate Rooney. Prices for major cryptocurrencies are surging today. By noon Eastern, Bitcoin traded around $20,000. Ethereum popped to $1,200 and Solana rose to $38. Okay, those are the prices. Here are some of the top stories. First, much anticipated crypto regulation out of the UK could face a new setback. Boris Johnson announced his plan to step down as the country's prime minister after a wave of resignations within his government and party. Two of those resignations include City Minister John Glenn and Finance Minister Rishi Sunak. Both had been key to the development of new crypto regulations in the UK. The Bank of England said this week that it had to delay plans to introduce stablecoin legislation because of that chaos. Next, Riot blockchain is packing up its New York State mining rigs and moving them to Texas. Riot cited power costs and third-party fees as reasons why it would shut down its New York facility, CoinMint, and move the rigs to its hub in Rockdale. The move is happening as energy demand is skyrocketing in Texas, though. Reuters reported that demand on the state's power grid hit a June record and could hit an all-time high as temperatures soar. Finally, new research from Morning Consult found 1 in 6 U.S. households use crypto. The report found that most of these holders see crypto as an asset to make a profit on, not as a form of payment to make transactions. The study also found that consumer confidence among those crypto holders is 16 points higher than someone who doesn't use crypto. For our main story of the day, Crypto World's Mackenzie Sigalos spoke to Morning Consult's Charlotte Principato about that new survey and the shifting demographics among crypto users.
So I'm hoping that you can walk us through the key takeaways from Morning Consult's crypto report. What's the state of digital asset investors amid all this volatility?
Yes, our latest cryptocurrency report shows that, first of all, cryptocurrency is mainstream. There's no denying that when almost 20% of the US population, for example, owns some form of cryptocurrency, that this has cemented itself in our financial system, whether traditional financial providers like it or not. And what's also important to realize is that there's a lot of optimism amongst cryptocurrency owners, not just for the price of Bitcoin, but for the economy generally. And then thirdly, that globally, cryptocurrency owners are not a monolith. What we find when we look across 44 countries is that cryptocurrency adoption varies widely by area of the world where consumers live, and also for different reasons. A lot of consumers see cryptocurrency as a great investment, but others really embrace it as the future of money and as a form of payment that they're using today.
So in a minute, I definitely want to dig into how the demographics have changed. But on an earlier point you made about this optimism, you mentioned it specifically in the context of Bitcoin investors thinking that the price will go up. But are you seeing optimism in other corners of the crypto market, or is it very specific to the world's biggest token?
Cryptocurrency owners are optimistic about the economy in general, not only about the price of Bitcoin, but when we survey consumers daily about their consumer confidence, so their thoughts on the future of the economy, their general feelings about business conditions, what we see is that cryptocurrency owners are among the highest in terms of their consumer confidence score. And of course, that's depressed for the general population, given the macroeconomic conditions that we're facing. Cryptocurrency owners are no different. However, they are more confident than the average American right now about where the economy is going. That's partly due to the demographics of cryptocurrency owners. Millennials and men who make up a large portion of cryptocurrency owners tend to be more optimistic about the economy, but we really can't we have to really focus on the fact that cryptocurrency owners see a lot of opportunity right now, and they are still holding on to their cryptocurrency assets and thinking positively about the future.
So the crypto bro stereotype does seem alive and well in the data, but as you mentioned, the report shows that digital asset investors are a diverse group. So how have demographics changed in the last year?
Yes, I think that's so important to point out that the crypto bro stereotype is true, but two things can be true at the same time. cryptocurrency owners, if we were to gather a room of crypto owners and compare them to a room that was representative of the general population, are more ethnically diverse, for example, than the general population. 23% of cryptocurrency owners are Hispanic. And about 40% or 42% rather, a plurality of cryptocurrency owners come from households with income under $50,000. So there is a whole diverse world of cryptocurrency owners that we need to start to understand and really capture in the narrative about crypto ownership. And how we've seen that change over the last year or so, there's been a little bit more involvement in younger generations. Obviously, that has continued, and the adoption has really been led by millennials and men. But we're starting to see more Gen Xers coming into cryptocurrency as they're seeing more almost traditional ways of investing in it. And it'll be interesting to see how that changes if there's more regulation and just generally as the landscape changes.
So the survey shows this interesting dichotomy where you have crypto investors that are investing in digital assets to make money, but they're not using it as a form of money. Meanwhile, these same investors are actually open to alternative forms of payment, just not crypto. Why is there a split here?
I like to step back and look at cryptocurrency owners' relationships with all of their financial services providers, because I think it helps to address that question. The common misconception is that cryptocurrency owners want to shirk all or shed all traditional financial services relationships and just operate in this DeFi world. Our data shows that's not true. Cryptocurrency owners are more likely to work with more financial services institutions, have more banks, have more credit cards, and they're also more likely to use, as you mentioned, alternative financial services. So things like check cashing and money orders that we usually consider sort of underbanked activities. What that really means, though, is that cryptocurrency owners are sophisticated financial services consumers. They are open to using any type of financial service that's going to either make them money, like you said, or allow them to access their money better. And what they're really expressing oftentimes through cryptocurrency ownership is a desire to be able to move the money that they have more easily and to have better access to it.
Last question for you. A lot of investors, based off of this survey data, don't see crypto as a safe haven asset. And yes, there is a lot of price volatility, but what else is holding crypto back? Does it ever fix that? And where are investors putting their money instead?
That's a really good question. I think that what we're seeing right now is a slight pullback from all consumers in terms as they're facing these really unprecedented macroeconomic conditions. No one expected Bitcoin to, I think, survive this inflationary environment that we're having. Although some people were likely to see it as a potential hedge against inflation, it hasn't turned out to be that. The price has gone down as other equity markets have. I think that consumers in general are the ones that are holding on. Our data indicates that they are continuing to hold on to their cryptocurrency. It's really the institutional investors or the market makers that are driving down the price. So they're holding on to their cryptocurrency. Our data more broadly about how consumers are investing right now shows that folks are trying to stay the course. They're trying to find a steady place, throughout all of this churn that's happening in the markets, and really taking a long-term perspective because they do believe that this is a way to make money in the long term. And so I think they're treating it as we'll just wait and see and not make any rash decisions.
Okay, before we go, Galaxy Digital's Mike Novogratz thinks crypto will only get more popular thanks to a, quote, bear market of trust.
Crypto's going nowhere. People got into crypto because they saw a breakdown of trust amongst governments, society in general. And trust is going one direction. It's a bear market in trust. And so the primary reason why Gen Z and millennials love the decentralized idea, loved crypto, was because they looked up and saw, octogenarian leaders, making dumb decisions consistently. We're looking at an election where we've got Donald Trump versus Joe Biden. You can't think of kind of a worse combination, right? And so I don't think that the impetus which really started the crypto revolution is losing steam. It's actually gaining steam.
That's all for Crypto World for today. We'll be back again tomorrow with a lot more. We'll see you then.